This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi dollar, Aussie dollar, the Euro dollar, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar, and this is the triple bottom that I've been speaking about for the past several reports. I'm currently long from just above the 52 figure. My stop is in the 51.40 area. Prices are not rebounding sharply off this line, but they're still holding support. So I would maintain that bullish bias against this longer-term support line on the daily chart. But ideally, I would like to see a little more impulsiveness, and it's making me lean towards the bearish side. I had a big position in this. I've since decreased the position for that reason, because prices are going sideways here. Could be consolidating before a break lower. But again, just to reiterate, I am still long, and I still believe that the risk-reward in this trade idea is to the long side. The next chart is the Aussie dollar, and this is the daily chart. Let me zoom into the hourly chart here. And as I was mentioning two reports back, the potential for a inverse head and shoulder pattern that did not play out. As I mentioned in yesterday's report, we might draw the simple support line. That line did in fact fail, and we could see that one of the benefits of using simple support and resistance lines is that you don't have to be right, and if prices do break the line as they did here, we could see this is a good example of previous support acting as future resistance. Once we do have the breakout, we can see this line now acting as resistance. With that being said, it's not a very strong technical signal. In my opinion, I would just pass on this trade idea using this line as resistance, for example. The next chart is the Euro dollar, and not much has changed here either. I am still bullish against the 78.6 fib drawn from the low just below the 124 figure up here to the 147 figure, and prices have rebounded sharply. We've had a little bit of a pullback at this point, but I'm still maintaining that bullish bias against that 78.6 fib, and my stop would be located just beneath the low of this hammer candle, as I mentioned yesterday, in the 27.65 area. The last chart is the dollar yen, and not much has changed here either. I am still short this pair from the 90.80 area, which I mentioned it must be now 10 or maybe 10 or 11 reports back. This is the head and shoulder pattern. This is the left shoulder. This is the head. This is the right shoulder here, and prices have since fallen from that point. I was mentioning yesterday a possible short-term trade idea, and again, this is short-term analysis. We can see I was mentioning yesterday how we might look to enter at the upper part of this range, but we did have a close above the level, and then prices fell back inside the range. So if you are still in that trade, profits at the lower end of this range. Again, this is a consolidation after this massive red candle, down candle right here. So moving forward, we might use this as a reference point. This would be the upper resistance line here and the lower support line here. But this range is getting a little bit mature in my opinion, so odds are it's gonna break eventually. In my opinion, this would be a downside resolution, considering we had this massive down candle and then the sideways consolidation. So prices should break out in the direction of the trend that preceded the formation of the range. So in this case, that would be to the downside. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.